What is going on, guys? Nick here, back with another video. Is it time to dump Amazon stock? Well, the stock has sat completely flat for the past year and a half, and after their last earnings report, the stock dropped 14% in a single day, which is their largest drop since they IPO'd in 2006. The earnings report was brutal, with increased inflation costs, increased fuel costs, and increased labor costs all eating into this company's profits. So the question is the growth path for Amazon finally running out, where the company is not able to continue their hypergrowth that we've seen over the past 10 years, and Amazon is no longer a great investment? Let's take a look. So Amazon reported earning $7.38 per share adjusted versus $8.36 expected. Now this adjusted means that they took out the odd expenses and charges that are sort of unrelated to the business to make it a more consistent comparison for investors. So specifically with Amazon, they said in their first quarter of 2022, they had a net loss that includes a pre-tax valuation loss of $7.6 billion that includes a non-operating expense for their common stock investment in Rivian Automotive. So if you look at their income statement, you can see right here there's an $8.5 billion loss under other income. We can see that Rivian started the year around $100 per share and has since fallen down all the way to just $30 per share since, which is about a 70% loss on their investment. Now, just taking a very quick look at Rivian's financial statement, we can see that they recorded about $55 million in revenue, and if we go over to their market cap, the company is currently trading at about $26 billion. So as of right now, it's a complete crapshoot as to whether or not Amazon's $1.3 billion original investment in Rivian is actually going to pay off. Now, Amazon basically has two major segments. It's the retail division and the AWS segment. Now, the retail division is responsible for most of the revenue for the company, and AWS is responsible for most of the profits for the company. And this, in my opinion, is a big reason why I think AWS drives the value of Amazon's stock. In my opinion, and probably most other people, profits drive value. Now, AWS revenue did slightly beat expectations, coming in at $18.44 billion versus $18.27 expected. Amazon's ad business also came in a little light at $7.88 billion versus $8.17 billion expected. All around, this was a fairly rough quarter for Amazon with a lot more earnings misses than you would expect. But wait, there's more. Revenue growth actually came in very slow for Amazon at just 7% growth compared with the first quarter of last year. And while this might seem really concerning at first, AWS again is still the majority of the profit driver for the company, and they don't generate very much revenue, especially when you compare that to the retail division. Now, the forecasts for next quarter also don't look great, where Amazon's expecting somewhere between 3 to 7% lower revenue compared with the second quarter of last year. Andy Jassy, Amazon's new CEO, says that the pandemic and war in Ukraine have brought unusual growth and challenges. The company is squarely focused on offsetting costs in the fulfillment network now that staff and warehouse capacity are at normal levels. Amazon is continuing to face headwinds with increased inflation, increased labor costs, and increased fuel costs. But in my opinion, a lot of these things are fairly temporary, and if you're focused on buying Amazon and holding for the next 10 years, I don't really think that it means that the company's business model is broken and that the company is actually in serious trouble long term. Compared to another company like Netflix, for example, that also took a massive hit in their stock price, Netflix had been priced like a growth company, and it's operated its business as if it's still trying to remain as a growth company, when in reality I don't think that there's that much growth for Netflix to continue to obtain, and I think the company needs to start acting a little bit like a mature business rather than a growth business. Now, this is a very different situation compared to Amazon. In my opinion, Amazon's biggest issue is its competition with Microsoft's Azure. Microsoft is a very skilled enterprise software creator, and I think that skill in combination with Azure represents by far the biggest threat to Amazon's AWS growth. But Amazon and AWS are still leading the cloud market share at 33% of the entire market, with Microsoft's Azure sitting in second place at 22% of the market. Third place goes to Google, all the way down at 10% of the whole market. So let's take a look at Amazon's financial performance. Okay, so when we look at Amazon's revenue versus net income, we can see that Amazon's revenue had been growing very consistently over the past 10 years. However, we can see that big drop off that we see between 2021 and the trailing 12 months. Now, keep in mind, between 2021 and the trailing 12 months, we shouldn't see that much growth because they actually only are different by one single quarter. However, this is a fairly steep drop off from what Amazon's revenue growth had been seeing in the past. On top of that, we can see when we look at Amazon's net income that there was a fairly big drop off between 2021 and the trailing 12 months, and of course a lot of that did have to do with the Rivian stock price loss. When we look at the revenue versus expenses, we can see that again Amazon is a very tight margin business, with the majority of their costs going towards the cost of revenue. Just taking a quick look here, it doesn't look like any of their expenses have dramatically dramatically shot up. However, when we look at their expenses as a percentage of the revenue, it does look like there was very slight across the board increases. Fulfillment went from about 16% to 16.5%. Their technology and content increased by about 0.25%. Same thing with their marketing. And because Amazon is such a tight margin business, these small percentage increases do show pretty dramatically in their profits. Now, when we look at Amazon broken down by business segment, we can see here how international and North American retail sales make up the majority of their revenue. However, AWS makes up a very disproportionate amount of their profits. Now, zooming in so we can see these a little bit better, we can see that the North American retail segment did see a pretty big drop off in their operating income over the past 12 months. They went from taking in about $7.2 billion in operating income to just $2.2 billion over the past 12 months. AWS profit, on the other hand, went from $18 billion over 2021 to $20 billion over the past 12 months. Again, because the past 12 months and 2021 share 3 quarters, we shouldn't see that big of a difference between these two numbers. When we look at AWS's individual performance compared to last year at the same time, we can see that AWS's operating income increased from $4.1 billion to $6.5 billion between 2021 and 2022. This is about a 58% increase from last year at the same time, so this is why I say AWS is growing at a very healthy rate. So now, looking at the current forecast for Amazon stock going forward, it does look like revenue is still projected to continue growing at a pretty rapid rate. However, 2022 is projected to be a pretty rough year for the company's profits, with the current forecast expecting them to only make about $7.5 billion for the year. Now, that is projected to return pretty quickly for the company, and by 2024, the company is expected to earn about $7.19 billion in revenue and $52 billion in profits by 2024. Now, I think what makes Amazon a slightly tricky business to value is because of the fact that their revenue and their profits are driven by such different things. The revenue growth is sort of indifferent to their profit growth, but when we look over at their current forecast for the revenue growth, we can see that it is projected to slow down to somewhere between 11 to 19% over the next couple of years. And when we look at their net income growth, it is all over the place, with them projected to drop by about 77% one year and then back up to 373% growth, so it's kind of all over the place. However, when we look at the trailing North American and AWS profit growth, I think this makes things a little bit clearer here. While it does appear their profit growth is slowing pretty rapidly, again, this last point on this graph is the 2022 trailing 12 months, which shares 3 quarters with 2021. I expect for the company that retail is going to bounce back over the next year or two, because of course people are going to continue to buy all kinds of consumer products, and I don't really see any other company able to take significant market share away from Amazon over the next couple of years. I think that profit growth for the company should continue somewhere between about 18 to 24% going forward. Now, going over to my PE calculator, a growth rate of 18% comes out to a fair PE value of 40, and a growth rate of 24% comes out to a fair PE value of 67. Now, when we look at this valuation charted out, 2022 looks very scary with a massive drop off. However, if things bounce back by 2023 and 2024 as they're currently projected, Amazon is a fantastic buy and hold at the current price, with a potential upside of about 180% from the current share price, which is about $7,000 per share. Now, again, I know that it's been very tough if you've been an Amazon shareholder, especially over the past year and a half, seeing the company sit completely flat and then seeing this massive drop off in the price. However, I don't think that Amazon as a business is going anywhere anytime soon. I think all of their competitive advantages are still there. They're still the go-to for online retail, and they still are maintaining a huge market share in the cloud market. Now, what I would say to anybody who's considering getting rid of Amazon stock is to not treat it like a trade, jumping from trend to trend. Think about Amazon stock as if you own the entire business. Would you actually sell the business right now? Long-term investing is all about patience. And while it's very easy to sit there and look at an investment and say, oh, I'm in it for the long term, and then when you see the company's stock price not jumping quite as quickly as you wanted, you get impatient and you get rid of it. This is typically how you make the worst mistakes when you invest. While Amazon's financial performance over the past year hasn't been great, the long-term picture of the business and the story is still in great shape, and Amazon is in a great position long-term. I think if you owned Amazon stock, or you wanted to buy Amazon stock, now is a fantastic time to buy. I also think by 2030, if you still own the stock, that you will have done extremely well for yourself. But again, it takes a lot of patience to wait all that time, and that's just not some people's mentality when it comes to stocks. I have this great video up here for you next where I talk about some of the major mistakes people make investing, especially when it comes to PE ratios. I think unfortunately there's a lot of people who just don't fully get the whole picture that PE ratios can paint for them, and I think this video will take care of some of those myths. Now, and as always, thanks for watching.